Gold's making new all-time highs again. Goldman Sachs has a report that's filtering into the market, calling for 3,100 at least and 3,300 at most in their analysis. And China just announced that they sold an additional approximately, there it is right there, $57 billion worth of treasuries yet again.
Welcome to the Morning Markets and Metals with Vince Lanci, where each morning Vince brings you the financial and precious metals news to get you ready for your day. And now, here's Vince.
Good morning. I'm Vince Lanci, and this is the market rundown for Thursday. The headline is tentatively gold closes in on $3,000 as China sells more treasuries for gold. My hesitation is because I was multitasking. A little bit of housekeeping before we get going. GoldFix morning rundown is expecting to expand in syndication fashion in the coming months. As such, we are in discussions with potential sponsors for this program. If you are interested in being one, our contact info will be at the bottom of the page under the premium section today. Thank you. Let's get on with it. The markets are as follows. 10-year yields are 450, down almost 3. The dollar is 106.92, down 23. S&P 500 is 61.29, down 7. The VIX is 1560, up 34. Gold is 29.45, up 12. It was up as much as 19, I think. Silver 33.08. We have a nice little chart for you on that, an echo of what we talked about yesterday. Up 40 and change. Copper is 459, up almost a percentage point. WTI 789, up 39. Natural gas 426, down 17. Very volatile. Bitcoin 97,420, up 800 and change. Palladium 986, platinum 979, up 14, up 6.5 respectively. Grains are all up kind of uniformly. Soy 1036, corn 498, wheat 605, up 4, unchanged bid, and up a little bit less than a penny. Okay. This is the homepage. Why Goldman's 3,100 target is low. We just sent that out about 30 minutes ago, the GoldFix gold monetization thesis. And China sells more U.S. bonds and buys more gold. Also put together and sent out this morning. Here we go. The news and analysis, these are the stories we put out yesterday and today. China sells more bonds and buys more gold. We just alluded to that. These first two stories up top, we're going to discuss those today. Founders AM, China AI update, and 5,000 gold. Breaking down Goldman's target race to 3,100. That's yesterday's podcast. Initiating coverage of that report and the GoldFix PM report. Okay. Why Goldman's 31 target is low. We'll get to that first. Goldman reiterated its buy gold trading stance. The bank emphasized gold's value as a hedge against risks such as trade tensions, potential Fed policy missteps, and recession threats, noting these could push gold towards the upper end of its uncertainty bullish range, actually. Given that Goldman's analysis does not factor in the Chinese insurance industry's incipient physical offtake, we think Goldman is holding back on their bullishness. The higher upside is all but certain if China's insurance industry buys in. The full analysis link is at bottom there. Why Goldman's 3,100 target is low. That chart, which is in the report and we cover, if you want to look at that chart, I'd like you to focus on the red dotted line and the gray dotted line. We've been tracking those lines since October of 2024 when Goldman started opining that first central bank buying would slack off in 2025, indicating a lower gold target. They actually had lowered their target or backed off and kicked their bullish target down the road a little bit. And now that line has gone from low that's not showed to gray, right, to red. Now, the significance of that line is something we'll discuss later on. But you're raising targets on offtake, you're raising targets on price. Anyway, that full analysis is in the post why Goldman's 3,100 target is low. Next, China sells more treasuries for gold. This is brand new information. I think the FT broke it, but here's the key. In December, China sold $57 billion in US treasuries, and we would add, bought $4 billion in gold. 9 out of 12 months in 2024 saw reductions in China's US Treasury holdings. The 3 where they added were very modest, almost like noise. The data points to a strategic long-term shift in China's reserve management approach. Now, I'm going to read to you an excerpt from the FT, and they say, quote, China's holdings of treasuries have fallen to their lowest level since 2009, as Beijing holds more of its U.S. government bonds through lower profile accounts and diversifies into alternative assets. Analysts say the change partly reflects China's desire to diversify its foreign reserves by buying assets such as gold. But they add that Beijing is seeking to disguise the true extent of its treasury holdings by shifting them to custodian accounts registered elsewhere. Interesting take. It's the first time I think the FT's actually mentioned that they're buying gold, but it's the gaslighting, even though they're backing off on the gaslighting, alternative assets. An alternative asset means something that's different. Alternative music, alternative food. It doesn't mean something that's equal. And if you're owning a treasury, you're not owning it to consider something alternative. You're owning it to consider something. The word is replacement. That's the word. You want to replace or substitute, not even substitute. You want it to be an equal. And there is no equal to treasuries out there except for gold bullion. In fact, I would argue that there is no equal to gold bullion out there except maybe treasuries. Analysts say the change partly reflects China's desire to diversify, de-dollarize, diversify, replace, because of the fear of sanctions, which leads to the fear and execution, possibly, of wealth confiscation. When we confiscated Russia's wealth, and we can give it back to them, that's what people are talking about now. But when we did that, that was a financial nuclear bomb. No one's ever done that. We did it. That's one of the reasons that countries fear us in war, because we're the only country to use a nuclear bomb twice. The second one was probably unnecessary, but that's neither here nor there. And so while we think we're the most peace-loving people in the world doesn't really think that way. And financially, we now have nuked Russia. So this is what happens. Let's take a look at that chart. This is the FT chart. China's treasury holdings fall as those of UK, Luxembourg, and Belgium rise. Okay, well, all right. China is I guess you'd call that like a magenta line going down, right? They're going all the way back down to 2000 to give you the big trend. But you're on a trend lower here, right? And the UK is rising. It's almost like everything China sells, we ask the UK to buy. It's like the UK is our off-balance sheet holding company, as is Tether for Bitcoin. Anyway, there's the chart. Moving on. Japan is also continuing to sell. News and analysis, we just covered that. Market news. Federal Reserve officials in January agreed they would need, Fed minutes came out, would need to see inflation come down more before lowering interest rates further, and expressed concern about the impact President Donald Trump's tariffs would have in making that happen, according to meeting minutes released Wednesday. Okay, you can read the rest of that. Uh, the word concerned, I'm not sure if that was actually in the minutes. I haven't looked at the whole thing, but I haven't. The word concerned is not something that they would say. Uh, but let's assume that they are concerned. Well, I have heard Jerome Powell say, we're not concerned with what someone else does. We're only concerned with the outcome of what they do. So we're not concerned with the spending. We're concerned with, you know, it doesn't affect our policy. That's the key. This does not affect our policy until it manifests into data that affects the economy. So that's the first thing. The second thing is they weren't concerned about all the spending. They weren't concerned about excluding Russia. I mean, they lowered interest rates a full percentage point, and now they're concerned. There's no connection there for them. All right, you can read the rest of the stories there. Moving on, data on deck today is Philadelphia Fed, and there's another data point out there. It's in the bottom, and we have a bunch of speakers. Going to the charts, let's start with silver. Yesterday, I mentioned a concept of the measured move starting to play out in silver, and I was a little bit concerned about the structure up here. I thought that it could be a source of resistance. Well, here's your measured move. Basically, you take it's not a V, but it's kind of a rounding bottom. And this shape is actually better than a rounding bottom. Okay. From here to here, measured move. If we break this, we should go up kind of like a fish hook we talk about in Founders. We should break this. It actually takes us to 34.86. 34.80 is what I rounded it to. And then I just threw the arrow in there. So the structure doesn't stop it from getting to its level. The structure is actually part of its level. We could therefore test this level again. Anyway, I'm more friendly. Obviously, it's easy to be more friendly when the market's higher. But as long as we're above, say 32.40, then the market's fine. Now, you may know that I was long silver and I got out of it right before this spike, of course, right? And then I got short gold, and we'll talk about that in a second. Gold. Dabbling in polytrends. We'll talk more about that when I have something else to say about it. So far, so good, though. So there's the new high, a new all-time high. Goldman's report comes out. We get a new all-time. Look, Goldman's level is just low. I think they're doing it on purpose. I think they're buyers. Now, I wouldn't call this one of my uh, measured move rounding things, but it could be. It could very well be. This one was to there and then up. See this? You see this in silver now, right? Right? We had this in gold. We had a structure above. Jesus, it's a replication. Gold, retracement, break, and this structure wasn't a problem. Oh, let me go back to silver. Now it looks juicy. All right. Dip, retracement, structure above. Same damn thing. And most people will say, who don't understand technicals, will say, well, it's just a coincidence. No, it's not a coincidence. Charts are mirrors of human behavior. Anyway, gold. I have positions on, and I'm going to discuss that in premium very quickly because I know there's some traders out there who have been asking me questions because I was short. I'm going to go into that quickly to give you some feel for the logic behind it and how I expressed it, which is more important. I'm a very options-oriented person. All right. Checking back with the markets. That's pretty much it. Gold's up 10. Gold's up 11. Silver's up 34. So chopping around. It's 8:13 now. So if we weather the next half hour, then there should be buying again. There was buying yesterday. There'll be buying again coming in between 9 and 9:30. What happens the rest of the day is a different story. But I'm telling you, if you can weather the next 15 minutes and you are a short-term trader, you buy it and you sell it at 9:30. Very similar to buying the US close, letting it go up during Asian hours, and then selling the London Open. Same idea. It's a little bit of an echo trade. All right. Stay with us, and I'm going to go through the position analysis starting now. Oh, I'm sorry. Before I start now, I'm supposed to give a summary. So let's do that. Yeah, so let's just recap this. All right. Uh, in summary, gold's making new all-time highs. Again, Goldman Sachs has a report that's filtering into the market, calling for 3,100 at least and 3,300 at most in their analysis. And China just announced that they sold an additional approximately, there it is right there, $57 billion worth of treasuries yet again. And that's just the gold news. All right. I'll talk to you guys later on. All right. Have a good day. Let's see what happens.
Well, thanks for watching this morning's Markets and Metals with Vince Lancy. We sure appreciate you tuning in and starting your day with us here. Hope you enjoyed the show, and we'll see you again tomorrow. Please note that this video is not intended as legal licensed financial trading advice and is to be used for informational purposes only. Please contact your financial advisor before making any decisions, and thanks for watching.